Hey everyone, and welcome. Today we're going to dive into something pretty wild, a technology that's totally flipping the script on who gets to own the world's most valuable stuff. All right, let's jump right in. So let me just throw this out there. What if you, yes, you, could own a tiny slice, say 0.1%, of a crazy beautiful penthouse in Dubai, without, having millions sitting in your bank account? It sounds like something out of a movie, right? Well, it's actually happening.
The whole problem, really, has always been this giant wall, this ownership barrier. I mean, think about it. Priceless art, super high-end real estate, crazy rare collectibles. These are amazing investments, but they're basically locked away in a private club for the ultra-wealthy. Most of us are just looking in from the outside.
But what if we could just knock that wall down? What if we could completely rethink what ownership even means? Well, that is exactly where this new tech comes into play. Fractional NFTs. They're being talked about as the key to finally unlocking that door for everyone.
Okay, so what are we actually talking about? Let's get into the nuts and bolts of how one single super expensive thing can become an investment that a whole bunch of people can get in on.
All right, the official name for it is a fractional NFT, or FNFT for short. And what's so cool about it is how simple the idea really is. You take a unique digital token, that's the NFT, and it basically acts as a digital deed for a real-world thing. Then you digitally chop it up into smaller tradable pieces. It's kind of like buying a share of stock in a company, except you're buying a share of an actual physical asset.
So, how does this actually work? Well, it's a pretty straightforward process. First, you get your hands on a valuable asset, maybe a famous painting. Then, you create one big NFT for it, which is like its digital birth certificate and proof of ownership. That main NFT gets locked up tight in a digital vault, what's called a smart contract. And then, from that contract, little tokens are issued. And those are the pieces that people like you and me can buy. Each one of those little tokens is your very own, very real slice of that painting.
And this really just paints the perfect picture, doesn't it? You've got the one big asset, the whole donut, but it's made up of all these different colored slices. Each one of those slices is a fraction owned by a different person. It's such a simple way to see a really big idea. We're going from one person owning something to a whole community owning it together.
And look, this isn't some futuristic fantasy. It is happening right now. There are actual companies, pioneers really, building this stuff. You've got names like Centrifuge, ProP, and Realty. These are the guys building the platforms to actually make this happen, to turn real-world things into tokens and make it all accessible and safe.
Okay, so this is where it gets really exciting. Let's look at what you can actually do with this. We are talking about unlocking whole new categories of assets that, until now, were basically impossible for most of us to even think about investing in.
Seriously, just imagine this for a second. Imagine telling your friends you co-own a Banksy or a Picasso. With NFTs, groups of people can pool their cash together to buy these masterpieces, and then they all share in the bragging rights and the potential increase in value.
And it doesn't stop with art. This is a huge deal for real estate. Instead of saving up for years for a huge down payment on just one place, you could put smaller amounts of money into a bunch of different amazing properties all over the world. A little piece of a condo in New York, a slice of an apartment in Tokyo, it's a total game changer.
Okay, now here's one you probably didn't see coming. Music royalties. You could literally own a tiny piece of a hit song, and every single time that song gets streamed or played on the radio, you get a little bit of passive income. It's a whole new way for artists to get funding and for fans to invest directly in the music they love.
Now, look, as awesome as all this sounds, we gotta keep our feet on the ground. Like with any brand new, world-changing tech, there's always another side to the coin. It's super important that we look at the incredible potential here, but also talk about the very real challenges that are still out there.
So, you really need to see both sides of this. The upside? Well, NFTs are making investing way more democratic. They're making it easier to buy and sell things that are traditionally hard to sell, like art, and they're creating totally new markets. But the challenges are big too. You've got governments trying to figure out the rules. It can be really tough to agree on what an asset is actually worth. And yeah, in any new space like this, there's always a risk of scams and fraud.
So with all that in mind, where is this whole thing going? Well, even with the hurdles, the arrow is definitely pointing toward a completely different future for how we invest. So let's peek around the corner, shall we?
A lot of the experts who live and breathe this stuff are all pointing to one specific year. A year when this whole market is expected to really grow up. And that year is 2026.
So what's supposed to happen by 2026? The big prediction is that we'll have fully regulated marketplaces. That's huge, because it would solve a lot of the worries about security and fraud. And once that happens, you'll see way more everyday people getting involved. It could get to the point where fractional ownership is just a normal part of everyone's investment strategy.
And that really brings us to a pretty mind-bending final thought. This tech, it isn't just a new way to make money. It's a massive shift in our relationship with the things we value most. So I'll just leave you with this to chew on. If everyone can own a piece of anything, what does ownership even mean anymore?
Follow Web3 Newswire for more insights on how NFTs are shaping the future of Web3.